Forex response to increased Iranian oil exports by www.forexconspiracyreport.com. The price of oil fell by half over the last year. Many countries that earn most of their hard currency from exporting oil have seen the value of their own currencies fall substantially. A few months ago, we wrote about trading the Colombian peso as a case in point. Today, the Iranians have agreed to curtail their nuclear development program and submit to UN inspections. The end result of this will be increased Iranian oil exports. For Forex traders, the question will be the Forex response to increased Iranian oil exports. Where will oil prices go and whose currency falls? The Financial Times notes that increased Iranian exports will put other exporters under pressure. Estimates of Iranian output rising by as much as 1 million barrels a day within 1 to 2 years will inevitably depress prices, Moody's rating agency said in a report, undermining the creditworthiness of exporters with weak financial buffers such as Russia, Venezuela, Nigeria, Bahrain, and Oman. The deal, which will also allow Iran to regain access to as much as $150 billion in frozen assets and the global financial system, could increase output to 4 million barrels a day by 2017, Moody's said, citing the Institute of International Finance. Iran could also quickly release 30 million barrels from floating storage into global markets, depressing prices if there is no correspondent increase in demand. The expected increase in Iranian production could temper the rating agency's $5 a barrel price increase previously forecast for 2016. Oil-dependent producers are already reeling under the pressure of lower energy prices. Experts believed that oil prices would rise a bit by 2016, but Iranian oil on the market will likely turn that around. The Forex response to increased Iranian oil production will be most felt in the nations mentioned in the article: Russia, Venezuela, Nigeria, Bahrain, and Oman, as well as others such as Angola and Colombia, who derive the bulk of their hard currency from exporting oil. Who gets hurt the worst? Bloomberg notes that the Colombian peso declines to its worst in 3 months. Colombia's peso fell to a 3-month low after prices for oil, the nation's biggest export, tumbled amid mounting concern over Greece and China. The peso weakened 1.2% to 2,670.3 per dollar at the close in Bogota, the lowest closing level since March 16th. The drop was the biggest among 31 major currencies tracked by Bloomberg after the Russian ruble. Crude fell along with metals and grain as Greece's vote against further austerity and China's stock turmoil shook confidence in global economic growth. Oil, which fell the most in 3 months, accounts for about half of Colombia's exports and 17% of government revenue. The Forex response to increased Iranian oil exports does not just have to do with Iran, but also with a slowing economy in China, and thus lower demand for crude oil. The Chinese economy. The problem in dealing with China is lack of transparency. Although the government claims that the rate of growth is back up to 7%, many are skeptical. Forbes speculates on a Chinese commodities crash, not just oil, but everything else that the nation imports. It's entirely possible that the Chinese economy is in the middle of a massive crash. There are well-informed people asserting just that. As to what is happening in China, the streetwise professor, otherwise Craig Piron, something of an expert in these matters, as I've already pointed out, is less than ecstatic about the prospects. Now, think of how panicked the Chinese must be to implement measures that dwarf TARP. That's what economists call revealed preference, or in this instance, revealed panic. This gives the lie to official statistics, which show a patently unbelievable, even absent this massive stimulus, 0.1 percentage point decline in the growth rate. Also giving the lie to the official statistics is the collapse in China-driven commodity prices, notably iron ore and coal, and oil as well. The slowdown in commodity economies further discredits the official Chinese data. If you believe this story, you can expect oil will fall farther. The Forex response to increased Iranian oil exports will be multiplied by a global economic slowdown due to China's slowing economy. For more insights and useful information about trading foreign currencies, visit www.forexconspiracyreport.com.